Today on Seat 11A, we are joined by Felix Strohbichler of Palfinger AG for an elevator pitch. In the next few minutes, investors will get a concise overview of Palfinger's business model, key growth drivers, financial profile, and strategic positioning within the global lifting solutions market. We are very pleased to have him here today. Felix, the floor is yours.
My name is Felix Strohbichler. I'm the CFO of Palfinger. First of all, what does Palfinger stand for? What is our equity story? We are a technology and at the same time the market leader in our industry. Secondly, Palfinger is a highly resilient company. We have a broad product portfolio, we are globally present, and we have a very broad customer diversity. Very important, Palfinger is clearly a growth company. We focus on growth markets like North America, APAC, namely India, on marine as well as on the service segment, and we still see a huge potential in Europe. And of course, the growth potential also leads to an earnings potential, and this is even further enhanced by digitization, standardization, and footprint optimization. Palfinger is a true global player. We had 2.34 billion of revenue in 2025, based on our comprehensive sales and service network all around the world, with our 30 production sites in every single region, with engineering centers worldwide, and with 12,000 employees at the end of 2025. What makes us very resilient is our industry diversity. As you can see on this chart, we have a very balanced customer segmentation. 18% of our revenues are in the infrastructure, around 14% in marine, then we have 11% in transport, logistics, building construction, public sector, including railway and defense and waste management. And then we also cover forestry, private housing, and rental. And this is a very balanced portfolio, which also means that in times of a downturn in one industry, we can compensate it with other industries. An important factor for our resilience is also our broad product portfolio. On the one hand, we have a lot of solutions on trucks and on rail cars. On the other hand, we have marine solutions on oil rigs, on ships. What all those solutions have in common are our digital solutions. Recently, we have communicated the start of the technology cooperation with ICON. This is a Texas-based company which is active in printing houses. So these are robot-assisted 3D printers. And as you can see on the pictures, those machines are delivered by Palfinger. So Palfinger has entered into the market of XX large robotics and digital manufacturing, which is a clear step forward in our product portfolio and offers a lot of potential for the future. Looking at the markets, how did they develop in the first 3 months of the year? First of all, we saw clearly an improved market environment in Europe, despite of the fact that the German market is still on a low level. And this, of course, led to a significantly higher revenue and also higher earnings. In North America, on the other hand, we had, due to the geopolitical tensions and the tariff policies, a slowed down customer demand, also resulting in a lower profitability. In LATAM, we can report some moderate growth, despite of a declining demand in Brazil. And in APAC, we see on the one hand that India remains the growth driver in the region, while the Chinese market remains still soft. Marine has been outstanding now for quite some years, and this trend also continues, driven by major orders in offshore wind, offshore crane, and cruise ship sectors, backed by very strong service activity. And last but not least, in CIS, the earnings and the revenue remain at a low level due to the overall economic situation in Russia. Coming to the outlook for the whole year 2026. For the first half of the year, we expect a development slightly above the prior year in terms of revenue and also EBIT. And we are also aiming for revenue and EBIT above the previous year's level in the second half of 2026, which means that we expect and have the goal to achieve another one of the most successful years in the company's history. We've also communicated financial targets by 2027. Those will depend on a further recovery in Germany and an upswing in the United States in Q2. So we clearly need to see some development in the short term here to maintain the targets for 2027. We have set ourselves in our strategy 2030 plus reach higher, ambitious financial targets. We want to reach more than 3 billion euros through organic growth until 2030 at an EBIT margin of 12%, 15% return on capital employed, of course maintaining our number one position in the market for crane and lifting solutions. So where should those more than 3 billion euros come from? The main drivers of the revenue growth in our strategy 2030 plus are coming on the one hand from service, as you can see in this chart. The recovery of EMEA will have a major impact, and aerial work platforms is also a major contributor to the revenue growth, amongst other factors like truck-mounted forklift, North America, marine defense, Latin America, and APEC, where we are just investing in a factory in India. Next to the potentials out of our strategic initiatives, we see major investment programs on the horizon, which create significant opportunities for Palfinger. On the one hand, in Germany alone, there is an overall investment need of 3.7 trillion euros until 2035. The EU infrastructure investment gap is amounting to 500 to 800 billions every year. The US Stargate project with $500 billion has already heavily kicked in. And finally, we will also see at a certain point in time an end of the war in Ukraine, and the reconstruction need is estimated at also 500 billion euros. So as you can see, a lot of opportunities ahead for Palfinger. Thank you very much for your attention.
Thank you, Felix, for this concise overview of Palfinger AG. For investors, Palfinger stands out through its global footprint, strong market positions in crane and lifting solutions, and its focus on innovation, service, and operational execution. You can find this video and many more management presentations from listed companies on Seat 11A. Thanks for watching, and we look forward to welcoming you back soon on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.